Good morning, ladies and gentlemen. A very warm welcome to you back on Business Today Television in our ongoing coverage of quality earnings coming out of the first quarter. We get you to meet companies that are likely to outperform in the remaining part of the fiscal year and, of course, may give an advantage to early birds who are either existing shareholders or may want to become one. In this ongoing series, we now focus on Tata Technologies, its first quarter earnings. It's a company that operates as a product engineering and digital services giant in North America, Europe and Asia Pacific. It's about a 30-year-old company, and Tata Technologies was recently listed about one and a half years ago. It had a fabulous first day, a bit of a disappointment later, but let's discuss what Q1 brought for it. And we are now joined by Mr. Warren Harris, who's the CEO and MD of Tata Technologies. A quick look at earnings, 5% rise in net profit to 174 crore rupees. Sales dipped a bit at 1244 crore rupees. And of course, EPS was also up 5% year on year to 4.2. A very warm welcome to you, Mr. Harris. What were the two or three major highlights that brought this 5% uptick in profit against the backdrop of a very challenging global environment, whether it's geopolitical or even business?
Well, I think the net profit performance is in part informed by the contribution that we're starting to see from the joint venture that we signed with BMW some 12 months ago. We began trading within the joint venture in November. We've stood up 1,000 people, and we're consolidating the contribution of the joint venture below the line, and so it's impacting net profit. And I think that's the primary component of the gain that we were able to celebrate at the end of the first quarter.
Okay. Tata Technologies also signed large deals, which were 6 in number. 4 were exceeding $10 million apiece, and 2 were between $5 million and $10 million each. Would you want to elaborate on this new customer wins?
Yeah, well, let me just provide a little bit of context. You know, we entered the quarter with a great deal of confidence in the fiscal year. Last year was really informed by the election cycle in the United States and the polarized policy position of the respective sides that were competing for the White House. We also had the EV incentives start to run off in mainland Europe, and also the real emergence of the Chinese players, not just in the Chinese market, but also in Europe. So many of our customers, given the uncertainty, had paused investment decisions, and that latent need for investment in new product was really what inspired the confidence that we had at the beginning of the fiscal year. I think the tariff announcement on April the 2nd obviously prompted further pause to the investments that we were expecting. And what we've seen play out in the first 3 months of the fiscal year is a level of confidence that despite the uncertainty that continues to be there, I think there's a growing confidence that common sense at the appropriate point will prevail, and that's started to prompt some decisions. And we've seen that with the deals that we've converted. Some of those deals we expected to convert at the beginning of the quarter, but again, given the confidence in the developments that have been announced specifically between the US and the UK, we've seen some customers use that to make the decision to begin the type of work that we were excited to contribute to.
Mr. Harris, apart from the macro and global issues, headwinds that companies such as yours are facing, there is also a large question mark that's emerged on how the global tech sector, in particular Indian software services companies such as yours, will tackle this relentless advance of artificial intelligence. Is it something that you are facing on a daily basis? How are you battling it? Is it good for long-term shareholders? Is it bad for employees? What is your thought process?
Well, our view is that it is net positive. We've been developing AI applications for the best part of 10, 15 years. I think with the advance of computing power, I think, and also the developments in and around generative AI, I think we're starting to see now the transformational opportunities that we've got in that sector, and we are leveraging AI both in terms of enhancing the lines of service that we deliver to customers. We're also using AI to improve productivity across all of the functions inside of our organization. And just to give you an example of one of the engagements that we're currently involved with, we're working with a tier one automotive company, and we're deploying our Chromosome AI framework within their production facilities. And what we're actually doing is deploying sensors on legacy manufacturing assets. We're collecting data from those sensors, and we're using our AI framework to identify opportunities to accelerate manufacturing throughput and improve the uptime of those manufacturing assets. And that's delivering significant bottom line improvement to that organization. And so, that's just an example of how we're looking to enhance the proposition that we represent to the market. Now, in terms of the challenge, it certainly challenges all of us, from me down within our company, to reassess the roles and the work that we do, and to look to leverage technology in the most appropriate way. And so, we're not intimidated by that. We see that as an exciting opportunity. And as long as we can be more creative, we can come up with more ideas, and we can be more innovative than the rest of the market. Again, we see AI as being net positive in terms of the growth and the prospects for our company.
Okay, Mr. Harris, about a third of your revenue comes from group companies Tata Motors and JLR. Both of them have been undergoing the same crisis as is afflicting the rest of the world, which is geopolitical issues on tariffs, as also disruption of supply chains. As two major customers, what are your interactions with them? Have they provided some comfort in terms of maybe fresh orders, or maybe just a good backing that you have of them?
Well, the strategic relationship that we enjoy with our anchor customers, Tata Motors and JLR, are a tremendous source of value to our company, not just in terms of orders and in terms of business, but also the opportunity that they represent to incubate capability that we then take to the rest of the market. So, we're fully invested in the program plan and the vehicle plans that both organizations are investing in, the investments that they're making in new technology, the capacity that they're building out as far as manufacturing is concerned. So we're making a contribution across the value chain, and both organizations in their respective markets have done very well in the past. They are now debt-free as a group and as an organization, and I think that will provide the platform and confidence for them to continue to invest and continue to differentiate themselves in the markets in which they compete.
Mr. Harris, what is the position of the order book as of now? Given that we are in the first quarter, would you be in a position to share some kind of guidance with long-term shareholders?
The only thing that I will say is that the order book at the end of the first quarter was materially higher than the order book at the end of the first quarter last year. And so that's what's really inspiring our confidence in growth in Q2 and in the second half of this year. We don't provide specific forward guidance, but I can say we are very confident that we can grow from the position that we start the second quarter in.
Okay. The headcount at the moment stands somewhere like 12,400. It was down 2% Q on Q at a time when the attrition has probably inched up a bit. Would you want to comment about how the headcount is likely to shape up? Was this 2% Q on Q reduction something that the company worked towards, or this is a natural outcome of maybe better opportunities outside Tata Tech?
Well, I think that there is a shift that is going on in the manufacturing space away from legacy mechanical engineering capabilities towards software embedded electronics, and I think as part of that, there is a structural shift that is going on in terms of skills and capabilities, and there will be an element of attrition that's associated with that switch. We are very comfortable with the headcount that we've got at the moment, not just in terms of managing cost, but also in terms of fulfilling the opportunity that the order book positions for us. We were very deliberate in the first quarter not to drive any structural changes as far as cost is concerned. So the changes in headcount is very much a natural consequence of the prevailing attrition that surrounds not just Tata Technologies but the industry.
Okay, Mr. Harris, I have an odd question. I see a lot of worry lines on your forehead, given this tentative world that we live in, where we really don't know what's coming next, and more importantly, from which direction. At this point of time, are you optimistic about business?
Well, I think the worry lines relate primarily to the amount of travel that I'm currently doing. We are operating in all three continents, Asia, Europe, and North America. I'm on the road 2.5 weeks every month, engaging with our customers as they are preparing their plans for the future. So the worry beads are not a consequence of the lack of confidence, because the engagement that we have with many of our top tier customers inspires a level of confidence that we've not seen certainly over the last 12 to 18 months.
Mr. Harris, what would be your top two worries?
I think that the primary concern at the moment is we are living in a world that is presenting constant challenges and constant surprises, and it's the concern about the unknown that keeps me awake at night. We did not anticipate the extent of the tariff impact. We were certainly expecting a much more favorable set of economic conditions than we find ourselves in at the moment, and I think it's the uncertainty around that at some point will start to impact the consumer, and obviously when that happens in markets like the United States, I think that will have an impact upon everybody, and so that's my primary concern. I think the other concern that I have is our business, despite the advent of AI, is still very much a people business, and so one of the things that I remind my team of is that we've got two markets, one for customers and two for people. And so the other worry that I have is just making sure that we continue to attract and retain the best and the brightest in the market.
Mr. Harris, on this somber note, we'll draw a close on this conversation. Here's wishing you the very best in the coming 3 quarters for this financial year. And let's hope that this headwind that we see coming primarily from the United States, whether it's geopolitical or economic, eases out for the betterment of the world. Here's wishing you all the best, sir.
Thank you very much indeed. And again, thank you for your interest in our company.
That, ladies and gentlemen, was Tata Technologies, the CEO and Managing Director, Mr. Warren Harris, discussing subsequent 3 quarters from here and now. 5% uptick in quarterly profit at 170 crore rupees, a marginal decline in Q1 sales at 1244 crore rupees. Headwinds via tariffs that came in from the US were a dampener as far as markets were concerned, as far as business was concerned for Tata Technologies. But the JV with BMW, 6 large deals that the company struck, came in good stead as far as the quarter gone by was concerned. The company has not shared any guidance for the coming quarter or the rest of the year, given the headwinds that we are facing and the unpredictability that is there in the market. As far as AI is concerned, well, Mr. Harris said that it was a net positive for Tata Technologies. Not only is it a technology company, it's also a people's company. So a lot of balancing needs to be done. Stay glued to Business Today Television, ladies and gentlemen. There's a lot that's happening on the other side of the break. News continues in a market that is a bit up after 5 days of successive falls. Mangalwar hai to mangal hi hoga.
If you like the video, do like, comment, share and subscribe. If you like the video, do like, comment, share and subscribe.